Hey traders! Welcome back to Trader DNA, the place where we turn complicated trading strategies into simple, powerful tools that anyone can use to crush the market. Today's video is going to blow your mind because we're diving into one of the most underrated but deadly accurate techniques used by banks and pro traders. And trust me, most beginners have no idea how to use this tool properly. Now look, I know there are tons of ways to analyze the markets, from order blocks, chart patterns, candlestick signals, price action, even volume analysis, and yes, I get it all. Those methods are great, but if you want fast, scalable, and insanely efficient analysis, there's nothing more effective than using indicators. Why? Because indicators give you real-time visual confirmation, and the best part? Their accuracy is measurable. You know exactly how well they work. But here's the twist. If you really want to take your trading to the next level, then combining indicators with price action is where the magic happens. That's what institutional traders do. That's what banks do. They don't rely on just one method. They use them together like a sniper choosing the perfect shot. So today I'm giving you one of those sniper tools. It's called the Fractal Breakout strategy. And yes, it absolutely works across Forex, stocks, commodities, and even crypto. But here's the sad truth. Most beginner traders completely mess this up. They either ignore it or use it wrong. And as a result, they miss out on one of the most powerful tools sitting right in front of them. So if you've ever felt confused about how to use the Fractal Indicator, or you've tried it but ended up with losses, this is the video you've been waiting for. I'm going to break it down step by step and show you a simple, yet insanely powerful fractal strategy that can seriously boost your win rate, even if you're a complete beginner. Grab your notebook, close your tabs, and get ready, because we're about to unlock a tool that could change the way you trade forever. Let's get started. Alright, now let's talk about something that trips up almost every new trader, the Fractal Indicator. If you've ever tried using it, chances are you've been overwhelmed by just how many signals it throws at you in a short period of time. 1 minute it's telling you to buy, the next minute it's flashing a sell signal, and before you know it, you're lost, confused, and probably making some bad trades. Sound familiar? You're not alone. That's actually the biggest reason why this insanely powerful tool, the very same one used by banks and pro-institutional traders, ends up looking totally useless in the hands of beginners. It's not that the Fractal Indicator is broken, it's just being used the wrong way. But here's the good news. Today I'm going to flip that script for you. I'm going to show you a version of fractal trading that actually makes sense. We're going to cut out the confusion, simplify the process, and give you a crystal clear method that'll instantly level up your trading skills. So if you're serious about getting better, do yourself a favor, hit that subscribe button, smash the notification bell, and make sure you don't miss the rest of this series. Because, trust me, you don't want to be risking real money on broken strategies that never worked in the first place. What I'm about to show you is cleaner, smarter, and flat out better than the way most people use the Fractal Indicator. Now let's break down exactly how this strategy works, because once you get it, you're going to realize just how powerful and game-changing this can be for your trading. We're talking about the Fractal Breakout strategy, and unlike random guesswork or jumping in based on pure emotion, this method follows a clear, logical process that's been used by pros to catch huge moves in the market. Here's how it works. This strategy is built around the idea of trading breakouts, but not just any breakout. We're using fractal patterns as our guide. A fractal arrow doesn't just pop up out of nowhere. It's formed only after 2 candles have closed on either side of a key candle. So when you see a fractal arrow appear, it means something important just happened. It's a signal that the market may be getting ready to move. But here's the key. We don't trade just because we see the arrow. That's where most beginners mess up. What we're doing is waiting for confirmation. And that makes all the difference. For a buy setup, we wait until the price closes above the high of the candle where the fractal arrow showed up. That's when we know the market has real momentum and not just a random flicker of movement. This one simple filter, waiting for the breakout to actually happen, helps you avoid fake outs, bad entries and emotional trades. It's like having a built-in lie detector. We only enter once the market proves itself. And trust me, this kind of patience pays off big time. The strategy works for both trend continuations and reversals, which means you can use it whether the market is breaking out of a range or flipping direction entirely. And because it's all based on price action and confirmation, it adapts beautifully to high volatility conditions where fake breakouts are everywhere. At its core, this strategy is all about timing. Getting in not too early, not too late, but right at the moment when the market shows its hand. Let me show you exactly how to spot it step by step on the chart. You're going to love this. Alright guys, let's dive straight into a real example of how this strategy works in a bearish market. And trust me, this strategy is so simple, even a beginner can understand it. But here's the catch. Even though it's easy to follow, you have to stay 100% disciplined with every single rule. No shortcuts, no guesswork, just clean rule-based trading. Because what I'm about to show you is the foundation, the core of the entire trading strategy we'll be using in this video. This is the real deal. Let's start by looking at this chart right here. As you can clearly see, the market is in a strong downtrend. Now, pay close attention. Right here, a fractal arrow pointing down has just appeared. That's your signal to get ready. But don't enter the trade yet. Patience is key. The next step is super important. You have to wait until a candlestick moves below the lowest point of that fractal candle and closes there. Not just a quick dip, it needs to close below that level. That closing price acts as your confirmation. It's like the market saying, yup, we're going down. This filter helps you avoid fake outs and noise from random price spikes. Once the candle closes below that key level, boom! That's your trigger. That's when you enter a sell trade. Right at the close of that candle. You're not guessing. You're not hoping. You're reacting to a confirmed signal. And here's why this works so well. It's a simple, yet super effective way to catch bearish momentum. You've got a clear entry, a solid rule, and best of all, you're not getting faked out by random price wobbles. By using the closing price as your green light, you avoid jumping in too early, and that means fewer losses and better entries. This strategy is built for traders who want precision. It helps you lock in on the moment when the market truly breaks down, and that can seriously boost your odds of getting into high probability trades during a strong downtrend. Alright, now let's make this super clear by walking through two simple but powerful examples, so you'll never be confused about how to use this strategy ever again. First up, let's talk about a bullish setup. Imagine you're looking at your chart and suddenly, bam! An up fractal arrow pops up underneath a candle. It's basically shouting, hey, the market might go up from here. But listen carefully, we do not enter the trade just because we see the arrow. That's a rookie mistake. Instead, we stay patient and smart. Here's what we do. We wait for the price to cross above and close higher than the entire candle where the fractal arrow appeared. Not just touch it, it has to break it and close above it. That's our green light. Your actual entry point isn't when the fractal arrow shows up. It's when the first candle officially breaks above and closes above that fractal candle. That's the secret sauce. It's like the market raising its hand and saying, yup, I'm really ready to move up now. And because we're waiting for confirmation, we're slashing the risk of getting trapped by fake signals. Now let's flip the script for a bearish setup. You're watching the chart and suddenly, whoosh, a down fractal arrow appears above a candle. Big warning, the market be getting ready to drop. But again, we don't just jump in because the arrow looks tempting. We play it smart, we wait. The key move here is to watch for the price to cross below and close lower than the entire candle where that down arrow appeared. Only after that confirmation do we enter the trade. At the closing price of the first candle that successfully breaks and closes below the fractal candle. That's how we catch real momentum and avoid getting wrecked by fake outs. By following this simple rule, waiting for real breakouts instead of acting on early signals, you're giving yourself a massive advantage. You're not trading based on hope or hunches. You're trading based on clear, proven confirmation. And honestly, This single adjustment can be the difference between being a frustrated trader and becoming a confident, consistent winner. This method doesn't just bring structure to the crazy world of fractal indicators, it transforms the way you approach trading. No more guessing, no more stressing, just clean, logical entries based on real market action. Alright, now that you understand the logic behind it, let's dive even deeper and look at some real chart examples so you can see exactly how this works in action. Trust me, it's going to click for you and you'll wonder why you ever traded fractals the wrong way. Let's go. Alright guys, here's where things get really exciting. And if you've ever wondered why the market suddenly explodes up or crashes down, this is the part you absolutely need to understand. Let's say we're looking for a buy setup. What does that even mean? It means we're waiting for the price to break above a key resistance level. Now, hold on, what's a resistance level? It's basically a price point where in the past, the market tried to go higher, but got slammed back down. Imagine the price climbing a staircase and then bam, it hits a ceiling. That ceiling, that's resistance. And the reason it keeps falling from there is because a bunch of sellers are hanging out at that level saying, no, we're not letting this go higher. So what happens when the price finally breaks through that ceiling? When it doesn't just tap it, but closes above it with real strength? That's a big deal. It's not just a breakout, it's a power shift. It means the sellers who were blocking the price are either out of the game or getting squeezed out of their positions. And that changes everything, because when those sellers are gone, it's like opening the floodgates. Buyers see the breakout and say, let's go, and they start piling in, pushing the price even higher. That momentum, it feeds on itself. Traders see the breakout, algorithms fire off buy orders, and boom, the price can explode upward. It's not just technical, it's psychological, it's human behavior on full display. Now flip the whole thing upside down and welcome to a short setup. In this scenario, instead of resistance, we're watching a support level. That's the price floor where the market has bounced upward in the past. So imagine the price falling and then boing, it bounces up like it hit a trampoline. That's support. And why does it bounce? Because buyers are stepping in and saying, we think this is a good price to buy. But what happens if that support level breaks down? Like the price just crashes through it, like the trampolines snapped in half. That's when buyers panic and sellers smell blood. The buyers are either stopping out or holding back and sellers take over. Now we're in full bearish mode. Sellers drive the price down even further because there's no more floor. And that can trigger even more selling pressure. So here's the golden rule. Resistance breaks can mean strong buy opportunities and support breaks can mean strong sell opportunities, if you know how to read them. And this isn't just about drawing lines on a chart. This is about understanding the battle between buyers and sellers. Who's in control? Who's losing grip? These key levels, resistance and support, they're like the front lines of a war. And when one side retreats, the other side charges forward. If you can read those moments, the breakouts, the failures, the shifts in momentum, you'll stop reacting late and start making smart, confident trades. This is the kind of stuff that separates random guessers from skilled traders who actually have a game plan. So yeah, it might sound simple, but this concept of support and resistance and how the market reacts when those levels break is literally one of the most powerful things you can learn as a trader. Master this, and you're already way ahead of the average person staring at charts with no clue what's going on. Let's keep going, because in the next part, I'm going to show you how to spot these levels before the big move happens, so you're not chasing the breakout, you're ready for it. Guys, if you've made it this far, buckle up, because what I'm about to show you could make your trading accuracy up to 5 times better. Yes, 5 times. This is the part where average traders get left behind and you take the leap forward. So far, we've covered the basics of fractals, what they are, how they work, how to use them. That was the foundation. But now we level up. You're about to understand how pros use this tool the right way. Because here's the thing, the fractal indicator is insanely powerful, but most beginners totally miss the point. They either misuse it, ignore the bigger picture, or just give up too soon. But you won't, because I'm going to make it so simple that by the end of this video, you'll feel like a market detective. Let's go straight into it. A lot of people just see a fractal arrow and think, boom, let's buy, or boom, let's sell, but they're missing a huge piece of the puzzle. The trend. That's right, the overall direction of the market. Are we going up, down, or just sideways like a confused crab? Because if you're trading against the trend, you're basically swimming against a tidal wave with bricks in your pockets. You might survive a few times, but you won't go far. That's why we emphasize this again and again here on the Trader DNA channel. Always trade in the direction of the prevailing trend. It's like having the wind at your back. You're not fighting the market, you're flowing with it. And that increases your chances of winning. Think of it like surfing. The fractal indicator tells you when a wave might come, but the trend tells you where the ocean is pushing. You can have the best surfboard in the world, but if you're facing the wrong way, you're just going to wipe out every single time. So here's what we do differently. Instead of blindly jumping in on a fractal breakout, we ask, is this move going with the trend or against it? Because the truth is, a breakout that goes against the trend is way more likely to fail. You get false breakouts, price reversals, and that nasty little thing called emotional damage from losing trades. But when you enter with the trend, the market is your best friend. It carries your trade forward and boosts your chances of a solid win. Bottom line, fractals are powerful, but they become a super weapon when combined with trend direction. That's the secret sauce. That's how you avoid noise, filter out fake moves, and only trade the moments that actually matter. And guess what? We're just getting started, because in the next part, I'm going to show you exactly how to identify the dominant trend and lock in those high probability setups. So don't blink, because this is where your trading game goes next level. Guys, you're not going to believe this. I'm about to show you how a simple tweak using 2 lines on your chart can take your trades from meh to massively accurate. If you thought the fractal breakout strategy was good before, wait till we supercharge it with this method. Alright, listen up. We're about to take the fractal breakout strategy and turn it into a high precision trading machine. And the best part? You don't need to be some math genius or Wall Street pro to do this. All you need are 2 moving averages and the ability to recognize arrows on a chart. I'm serious, it's that simple. We're going to use the 200 period moving average to spot the big picture trend and the 14 period moving average to catch the smaller, faster moves. Think of the 200 as the map and the 14 as your compass. Step by step, let's say the price is above the 200 period moving average. Boom, this tells us the market is generally in an uptrend. Green light, folks. But here's the trick. We don't just jump in right away. We wait. At some point, the price is going to dip slightly below the 14 period moving average. Don't panic. That's just a temporary pullback. While it's dipping, you might see an up fractal arrow appear. That's like the market whispering, hey, I might be getting ready to go up again. But don't trade just yet. You wait for 2 confirmations. First, the price has to break back above the 14 period line. Second, it has to close above the high of the candle that showed the up fractal. When that happens, boom. That's your signal to enter a buy trade. And guess what? We don't leave you hanging on risk management. Place your stop loss just below the 14 period moving average. If the trade doesn't work out, you're protected. But if it does, you're riding the trend like a pro surfer on a monster wave. Now let's flip it. If the price is below the 200 period moving average, that's a downtrend. We're looking for short trades. Here's what you do. The price might rise briefly above the 14 period moving average. That's just noise. Don't freak out. If a down fractal arrow appears during that little rise, pay attention. Just like before, wait for confirmation. You want the price to break back below the 14 period line and close below the low of the candle where the down fractal appeared. Once that happens, boom again, you enter a sell trade. Place your stop loss just above the 14 period moving average this time. Clean, simple, safe. Analogy. Think of the 200 EMA as a GPS. It tells you what highway you're on. Are we heading north, bullish, or south, bearish? And the 14 NA? That's your lane marker. It helps you switch lanes at the perfect time without crushing into market traffic. Big takeaway, when you combine the 200 period MA, the 14 period MA, and the fractal breakout signal, you're no longer guessing. You're trading with laser precision, filtering out garbage trades, and only acting when the market gives you the green light. Guys, this is the secret sauce that separates the rookies from the real deal. No more getting faked out. No more emotional roller coasters, just smart, high probability trades backed by trend power. And trust me, once you see this in action, you'll never want to trade without it again. Let's go. In the next part, I'll show you exactly how to set this up on your chart, step by step, so stay tuned. Imagine if you could set up your trading screen in just 60 seconds, and it instantly shows you when to buy and when to sell, almost like it's shouting, "Go now." That's what I'm about to show you. Let's go. Listen up. This setup is so simple, it's ridiculous, but don't let that fool you, because with the right setup, this fractal breakout strategy can take your trading accuracy to the next level, like 5 times better. I'm not even joking. So here's how you do it, step by step, lightning fast, zero confusion. Step 1, slap a 200 period EMA onto your chart. That's your long-term trend detector. Think of it like your market compass. If the price is above this line, you're in a general uptrend. If it's below, you're in a downtrend. Super simple. Step 2, drop in a 14 period EMA. This one's like your market heartbeat. It shows short-term moves, fast, sharp, and super helpful for finding exact entries. Step 3, now add the Fractals indicator. You'll start seeing little arrows pop up. Those arrows, they're gold. They show you potential turning points. But wait, it gets even better. If you're watching this and you're like, I don't know how to do all that, don't worry. I've already created a ready-to-use template for you. You can literally download it from the link in the description and boom, it sets everything up for you in one click. No stress, no confusion. Now here's a huge tip most traders miss. When you see multiple fractal arrows during a pullback, you don't care about all of them. Nope. You only focus on the latest one. That's your signal. That's your green light. Forget the others. They're old news. For a downtrend, price rises temporarily, then bam, a down arrow. Wait for price to break below the low of that candle. If it closes below, you've got yourself a strong sell signal. But remember, this only works if you follow the rules. No guessing. No shortcuts. If the setup isn't crystal clear, stay out. Discipline equals profits. And hey, if you want this exact strategy fully set up and ready to go, check the description and download the template. It's plug and play, no extra work, just load it up and go. If this video just saved you from months of confusion, smash that like button, hit subscribe and ring the bell so you don't miss what's coming next. And if you know anyone who's trying to learn trading, share this with them on WhatsApp, Facebook, X, wherever. Let's help more people win. See you in the next part. It's going to blow your mind.